are, addressing these issues. We have a good speakers from Society of Human Resource Management, from different industries. So I am expecting that they will definitely share their experiences and highlight the best practices of the industry, so which will enable finance professionals as well. So how important is the human capital disclosures? Because the real force, if you look, the real force behind the success of any organization, that is human resource. So we must have the updated knowledge how we have to address these things as per the standards. So we have a number of good speakers we have right now, and I am expecting that their views of these speakers and their experience will benefit the audience. So I am thankful to my CPT committee, Mr. Athar Salim, who is the core responsibility, those who have to manage such kind of events for the benefits of the member, to join hand with HR Matrix, and they have organized a wonderful session. So we have a very good learned speakers, and I think one by one they will introduce. So in order to save the time, I would once again welcome you, and I am thankful to you on behalf of the ICMAP for sparing this time. Thank you very much.
Thank you very much to President of ICMA Pakistan for formally welcoming our guest speakers for the evening, as well as the audience. Now, I would like to request Zahid Mubarak, who's the CEO of HR Metrics, to kindly share the context of this session and also talk about leadership and succession metrics.
All right, thank you so much. Javeria, would you like to display the slides? All right, thank you so much. Once again, very warm welcome, everyone, distinguished speakers, participants, and particularly I'm grateful to Mr. Ziaul Mustafa and the management of ICMA Pakistan for making it happen.
Can you kindly unmute yourself?
Yes. Can you hear me now?
I can't hear you.
Can you hear me now? Hello?
I can hear you.
I can hear you.
All right, Javeria, I think others can hear. All right, so it's a great opportunity to be together. Otherwise, I think we were supposed to meet in Reno, Tahoe this year in May, where Lorelei was the host, but unfortunately, due to the current situation, that meeting is not happening. But Helger, I'm assuming that in September, I don't know what's the situation, that when the meeting is due in about the HR standards in Germany, so you would be knowing the situation better. Okay, so the topic is very exciting, the human capital reporting standard. What is in it for all the stakeholders? The stakeholders could be investors, directors, regulators, CEOs, CFOs, CHROs, general public, community, and even the customers. So next. Okay, so what about the HR metrics? Without going into more details, we are operating in a very niche areas, including the data analytics metrics. We are also pioneer in introducing the SHRM certification in Pakistan. We also introduced the global diversity inclusion benchmark standard in Pakistan, and now it's a great opportunity to introduce the human capital reporting standards along with the other standards. Next. Okay, so as far as the topic is concerned, it's quite exciting. We had a very interesting journey. I remember in 2011, probably we met in Washington, and the 11 countries were there under the umbrella of the ISO. And we started working on the HR standards, and then the discussion took place in the various parts of the world. So I think in past 10 years, we had the opportunity to interact in a face-to-face environments in the different parts, including the US, UK, Germany, France, Netherlands, Italy, I think Australia, Singapore, Indonesia. And this is process, at least one dozen standards have been developed, and I'm very fortunate to be accompanied by the people who have contributed directly or indirectly, most of them directly, during this standards development process. And one of the standards is the human capital reporting, which we have on our screen now. And we have a very diverse team of speakers, as Ziaul Mustafa already mentioned, to talk about the various components. And those components include the compliance and ethics, workforce cost, workforce productivity, skills, organization culture, leadership, succession, diversity, workforce well-being, workforce availability, and recruitment, turnover, etc. Next. Now, I think we need a very strong buy-in at the beginning before talking about the nuts and bolts of it. So I would like to take 3 to 4 minutes to explain the strong what is in it for you for the various stakeholders. So number one, the reason for that we actively promote this human capital reporting standard, that you must have heard this terminology very frequently, that people are our most valuable asset. It's a true narrative, but it's a narrative. And this is supported by the various studies. But my question is, and I'm not asking any answer or reply from your side, ask yourself that how many times you have seen actually on a piece of paper that you would have empirical evidence to see that the investment in the workforce has a corresponding return that you can demonstrate to the business that you can call the ROI. So in that context, this standard puts the HR profession in a very good position to use those frameworks which are required by the shareholders. And that is mainly those are the productivity and the ROI. Of course, in this session, we are not going to discuss how that is going to be measured, because this is an orientation session. We can have subsequently a round of any kind of intervention that can help you to realize that ambition. So that is number one reason. Number two, next. As I talked about the ROI, you understand ROI is a concern of the shareholder. But in the organization, everybody is not a shareholder. You have various other stakeholders, the employees who are concerned about their well-being, the employers, the manager, the top management who are concerned about the retention of the employees, the general public who is also concerned about the effects of the organization, the compliance and the ethics, the various supervisors who are interested in the developing a pipeline of the people who can assume responsibilities with the passage of time. So the 11 areas that I've shown in the beginning, that comprises of 58 metrics that put us in a very good position to take care of this concept, which is called stakeholder capitalism. Now, stakeholder capitalism, you must have heard about it. This was echoed very loud and clear in the most recent World Economic Forum, where it was emphasized. There are plenty of articles which demonstrate and evidence that companies who are concerned not just about the shareholders, but about the stakeholder capitalism are more sustainable. And I would like to say that current phenomena has really endorsed it. Although this current phenomena is not favorable to the world, but I would say that this is very favorable to the HR, that the world has realized, that the business community has realized that without the involvement, without the systematic, strategic HR management, the sustainability of the organization would remain at stake. Next. Third reason, I say that this standard is very close to the natural principle of human anatomy. Now, some of you would be familiar with the term of the left brain and the right brain. Whether we subconsciously know it or not, but the fact is that each one of us has two parts of our brains. The left, which is more linear, logical, sequential, analytical, and objective, and the right one, which is more holistic, creative, emotional, intuitive, subjective. It's not a matter of having one at the cost of another, but it's a matter of having a balance between the two. So when, as a member of the organizations, either we take decisions or we contribute toward the decision making, people expect us to have a balanced approach. But unfortunately, again, I leave it to your judgment. See it yourself. Are we balanced in our approach, or are we conscious of being analytical, objective, and number-centric, or we are completely intuitive, subjective, or emotional? This is a matter of question that we need to ask ourselves. And on the larger front, the studies show that HR people, they are definitely, this is a positive aspect of it, but in most cases, they're disregarded. They disregard the left side of it, which is the number analysis. And as somebody said very rightly, that you can have facts without thinking, but you should not be thinking without the facts. And if you think without the facts, there are consequences, there are implications for it. And the next slide would show us that what are the implications. This is an extract from another study in the United States, which is called the Chief Executive Group. They tried to identify the linkage between the net worth of the different positions and their organization intent to pay them. And if you look at the simple chart, after the CEO, the president, the chief operating officer, is the chief financial officer who is being highest paid officer in the organization. And if you look at the bottom, it's us, is the chief human resource officer. I'm not saying that this is universal. Your organization situation might be different, but this is what is happening on the larger front. And there could be so many reasons for it. But one of the predominant reasons which comes straight to my mind, and I think on which there's a wider consensus, that the finance people are more number-centric, they're more outcome-oriented, they're more evidence-based, and that is the reason that the CEOs have a more comfort to interact with them. So that is the reason that I always encourage, I motivate people that be outcome-oriented, be evidence-based if you want to have a success in your life. Otherwise, it's very difficult to grow in this tough environment. The next one. Now that I have talked about, since the time is quite limited, so whatever that I talked about, I'm just trying to explain it with the help of one of the cluster of the human capital disclosure that I already talked about. The leadership and the succession management is one of the components. As I said, there are total 58 metrics, and those are spread into the various categories. Now, I was just looking at some of the statistics, and I found that in 2018, $366 billion worldwide was spent on the overall training and development. And out of $366 billion, at least $3.4 billion went to the leadership development. Now, leadership development, on one hand, is a very sacred area. But on another hand, sorry to say, it's a very notorious area also, because in terms of the results, the development dimension international conducted the research, and they asked the CEOs that what are your top 10 concerns in today's environment? And CEOs said that number one issue for us is to find a suitable person within the organization to fill the key position. Now see that leadership development is whose domain? So as an HR, are we being regarded as a problem center or the opportunity center? So this standard puts us in a very good position to overcome the problem and the concerns of the CEO. How this is doable? Next. You see a couple of metrics in the standards. As an example, in leadership metrics, you have 3 metrics only. Leadership trust, which is the framework to determine that what is the degree of confidence or the trust level of people in the abilities of their leaders in terms of their credibility. Because now there is an empirical evidence that there's a positive correlation between the trust and the organization's sustainability and the profitability. The span of control, on an average, a single leader manages how many people and what the organization is doing on account of leadership development. Now, alongside with these 3 metrics, you have 3 more metrics. For example, succession effectiveness rate. If you want to see that leadership growth in your organization, it's very simple. Look at the critical position in your organization and see how many of them have been covered by the homegrown people. This is called succession effectiveness. And the succession coverages, that there are how many total positions and out of which how many are being covered with the help of the succession plans. And the final is, that's not just a matter of planning, but you need to demonstrate the results. The board is interested to know that what percentage of the positions you are capable of filling at a short notice. That short notice could be right now in a 1-year time frame, in 2 to 3 year time frame, or 3 to 5 years time frame. So the aim of giving this brief example was that the stories, narratives on one hand are important, definitely. Nothing is complete by story. But unless we translate our story into the numbers, and those numbers which are actionable, and I use the word thermostat because there are 2 types of the numbers. One is the number which is activity oriented, which is called thermometer numbers. And the other one is which are the outcome oriented, which put us in a position to play with those numbers and drive the organization forward. So with this, I would like to conclude my part because time is quite limited. And I would request Javeria to move to the next speaker. If there's a question toward the end, I'll be happy to answer. Thank you, Javeria.
I would like to thank Mr. Zahid Mubarak for his insightful talk on leadership and succession metrics. I would now like to request our respected speaker, Mr. Lee Webster. Mr. Lee is the owner of International Standard Service Solution in USA. He's also the former chair for ISO TC 260 HR standards. Mr. Lee would be talking about significance of ISO 30414 for investors. I'll be sharing your slides over here, Mr. Lee, and I would request you to kindly unmute your mic.
Thank you. Can you hear me now?
Yes, I can hear you. Let me just put your slides on.
Great, thank you.
Right, sir, you are on, please.
All right, thank you, and hello, everyone. My goal in this discussion is to set the table on the history of 30414 and also to give a little insight on the investment impact on investors related to this, the development of this new standard. Next slide, please. Next slide, please. Thank you. So this started, the development of this international standard started actually, could you go back? There you go. The development of this international standard started with the creation of actually a project to develop an American national standard in the area of reportable human capital. It was the Society for Human Resource Management was approached by an organization called XBRL, which was creating a business language for communicating investment information using technology and computers and the like. And they approached SHRM to say, well, one of the biggest areas that is left out of the communication of value of organizations is its human capital. So can we use this standard setting process as a way to provide that type of information as well? So a project was started in 2010 to actually develop an American version of a standard to report human capital information. Around 2011, that the technical committee, TC 260 for human resource management, was developed as well. So what we're seeing is that while the development of an American national standard in human capital reporting was occurring, roughly at the same time, the international program for creating all human resource management standards was created. However, in 2012, there were strong objections to the creation of a standard in the United States for reporting human capital, in large measure because it was something new to the human resource management leadership community, the CHROs and the like. They were concerned about how this type of information was going to be used and would it be used appropriately. And there was also a concern about materiality. So that program was discontinued. However, there were many leaders in this effort, and one of the key leaders in the effort of reporting human capital was Deutsche Bank. And Deutsche Bank contacted me and indicated to me that they felt that this was too important an effort than to just let it die at the US level. So they were gracious enough to sponsor the development of an international standard using the ISO technical committee in order to move forward with this reportable human capital effort. So that proposal was approved by the technical committee, TC 260, which developed the standard. They proceeded to create the standard in December 2018. ISO 30414 was published. Next slide. So this is more opinion than it is anything directly attributable to the standard, but one of the things that in discussing this issue with people outside of the technical committee, they identified a body of interests involved in this standard rather than just the human resources professional or even investors. The slide that you see is a representation of that view. essentially what it says is that there are many other interest groups who would have an interest or a stake in the development of the standard. And all of these interest groups, all of these bodies need to be addressed and included in the adoption and moving the standard forward. I'm not going to cover all of them, but as you can see, they include talent analytics professionals, the people who are actually going to be doing the calculations based upon the standards in their organizations. Many organizations have reporting professionals, which are different people from the talent analytics professionals, and the reporters of this type of information need to be engaged in the work as well. Consulting firms, actually the HRIS system developers like PeopleSoft and SAP, need to also have a place at the table with respect to reportable human capital, because they're more likely to integrate the calculations that come out of the technical committee into their software, which then the talent acquisition professionals will use. And as you can see, there are just several different interest groups here, and all those interest groups have a concern, and they're also an opportunity to advance the standard. Next slide. Next slide, thank you. The rest of the group will go into this, or the rest of the speakers will go into this in more detail, but this is what I wanted to highlight is the actual graphic that shows the different types of reporting areas and those internal and external stakeholders. So you can see a contrast between the previous slide and this one. Next slide. So some key terms and goals, for those of us who are new to 30414, from the introduction, it says that human capital is the cumulative knowledge, skills, and abilities of an organization's people and the impact of an organization's long-term performance, as well as competitive advantage and optimizing organizational outcomes. So that sets the table with respect to what the standard is trying to describe human capital to be. When we first started this work in the American National Standards version, and even moving into the international standard, it was actually a much more simple goal or grouping of goals than what appears to have evolved. It was to establish a practice of reporting human capital information. And for those of us involved in human resources, except for those exceptional and advanced thinking organizations, there isn't a practice of reporting this type of information. In some cases, not even internally, but certainly not externally. Second, to make the information material, meaning the information is important and necessary for investors or decision makers in order to make decisions. At least that's the view of it from the United States, the materiality. Timely, a lot of the human resource information I've been that's been available to me is aged because it's collected over time, and therefore it makes it difficult for business leaders to make a judgment based upon current conditions. Reliable, because of the HRIS systems we have, or some of us don't have, some of the data and how it's calculated changes from time to time, making business leaders uncertain about whether the data they've received is actually accurate and correct. And then finally, comparable. In order for investors to make decisions about whether or not to invest in company A versus company B, they need to have information that they can compare between the two companies in order to make a judgment on whether that company is the right investment. And the final one is to allow for some adaptation for organizational structure, size, and industry. So the ultimate standard needs to be adaptable in a way so that if you work in a large business or a small business, if you work in an aircraft industry or you work in restaurants, you can still find a value in using that standard. And that means it needs to adjust slightly to serve those different organizational interests. Next slide. So one of the things I've been asked to talk about is what are the benefits, and specifically to investors. This slide covers the benefits that cut across all organizations and all interest groups. Number one, it stabilizes human capital reporting so that there is actually a discipline called human capital reporting. Defines what is the material information. We've talked about that. it increases alignment across HR organizations. One of the principles involved in creating the human resource management standards overall is a belief that most of what is done in HR could be done similarly or the same. That the remainder is actually the true strategic work that we could be doing. And so these standards provides that platform by which we can begin to create that alignment across human resource management organizations, regardless of the business sector. Professionalizes talent analytics, and we've talked about talent analytics, and there's interest in it. Creates the comparable data, we've talked about that. Aids in managing employee risk. Again, the more accurate and the more timely the information is, the better business leaders are able to manage risk. And as we've learned from this pandemic, and as we will learn as we recover from it, managing the risks of employing and re-employing employees will be paramount to business leaders. Rewards organizations that manage their workforces effectively. As Zahid aptly said, organizations have often said how important their employees are, but there's not been a mechanism, a lever by which people can determine whether those employees are being managed effectively. The human capital reporting standards and the metrics that support it will provide that lever. And it finally provides metadata for national employment statistical bodies. In the United States, the Bureau of Labor Statistics has been approached, and they are curious about this standard and potentially how they can use data in that standard to help in their own national employment data communications. The other picture that you see there is of CFO magazine. It talks about human capital reporting, and it also refers to 30414. I encourage you to get a copy of this. It's an electronic document, and it's also listed within this presentation. Next slide. No, thank you. So I'm not going to dwell on this, but once you get a copy of these slides, you'll see that there's been a lot of recent activity in the United States and in the Securities and Exchange Commission concerning the development or the communication of human capital information. And what this slide will show you as you go through each of the documents and even videos that are attached to it in the links, that the SEC, which is the regulatory body for investors or investments in the United States, has made it very clear that they are looking for a mechanism to communicate human capital information to investors. They think it's important now, and they want to see this proceed. In fact, the chairman of the SEC found it so important that at an international meeting in Dublin in October of last year, he recommended that other countries and other regulatory bodies that oversee investors' activities begin to incorporate human capital information. Based upon that, we approached the SEC, shared information about 30414. They are aware of this document, and we hope that they will see it as a pathway to communicating the value of human capital in the future. Next slide, please. Within that document, the CFO document, you'll see other information about what's going on concerning the communication of human capital. What you'll find is that there are a lot of different organizations working on this subject of how do we incorporate human capital information in communications, whether it's internal or external. The difference between 30414, in my opinion, and what I'm seeing in others, like SASB and other organizations, is that 30414 focuses mostly on how to do it, not whether to do it. And so 30414 provides the actual tools, the mechanism by which a person can actually, or an organization can actually communicate the value of human capital. While many of the other organizations talk about how important it is and provide that level of guidance that it should happen, I see an open lane for 30414 to help organizations actually implement those goals. This next slide, please. So I'll conclude with the next step, and the other learned speakers can expand on the subject much more broadly than I can. But based upon what I've seen so far and in conversations with investment organizations, for example, you may be familiar with BlackRock, CalPERS, I've had direct conversations with the investment leadership, and what they've said to me is that there are 4 areas that they need help in order to promote the development and the advancement of this standard. The first is that materiality issue. They need to be able to help investors and those in businesses inside the management group get comfortable with the fact that the information in the reportable human capital standard that comes out of it is actually crucial to making business decisions. So they need to see that that is true, and so materiality is very important to them. Awareness building. The next step is to also make sure that more than just the human resources profession is aware of this standard and what it can do for them, but that people, as I mentioned in that constellation of interest groups, that all of those interest groups who would have an impact on the development of the standard or the advance of the standard are made aware and understand what their interest is in it. Third, adoption. By making them interested, it will also further the interest of making sure that organizations adopt this standard, and publicly so that it builds confidence that the standard is a practice that they should be using and can rely on as they move forward in their businesses. And finally, evaluation of its efficacy. There has to be some type of methodology by which someone, whether it's in the academic field or consulting field, takes a look at how effective the use of the standard is and can communicate back to the business community its value. That also will build trust and also spur adoption and improvement of the standard over time. That concludes my presentation for this meeting. Thank you for giving me an opportunity to talk about this subject, and now I'll hand the podium over to the host.
Thank you very much, Mr. Lee Webster, for sharing very useful insights with our audience on significance of ISO 30414 for investors. We are very privileged to now have with us Dr. Sandra J. Miles from Hutchins, Distinguished Professor of Management, State University, USA. She is also the convener, Recruitment Standards ISO 30405, former chair of US Tech. She's also part of HRCI standards development. Thank you very much, Dr. Sandra Miles, for joining us. I'll be putting your presentation in seconds.
Good morning, good afternoon, good evening, depending upon where you are on the planet. It's my pleasure to be able to talk to you about some of the key metrics in ISO 30414. My absolute favorite cluster is the productivity cluster. This particular cluster are key markers and ones that really do give a hint to the value that human capital can bring to an organization. Or as Zahid said in his opening remarks, it's a gigantic step in connecting people to the profits of an organization. So if you could go to the next slide, please. By definition, productivity is the organization's efficient and effective use of its resources that they can turn value into the organization. It's a proxy by which organizations can be compared. It's such an easy calculation to calculate productivity ratios. Typically, it's taken as the earnings before income and taxes, and it is divided by full-time equivalent. This easy calculation makes it a favorite of investors, and it's also the accessibility of the data. Most of the data is readily available in publicly held reports. And because of the availability and the simplicity of metrics, it really is the favorite of investors. As an investor, next slide, please. Supposing I'm interested in investing money into the grocery sector in the US, what you can see here is the productivity measures that a company that an investor may be able to do. It took me all about 3 minutes to create this chart from the publicly held data. 3 of the major grocers in the US are Costco, Walmart, and Kroger. Costco's productivity metrics, basically their earnings before interest and taxes divided by full-time equivalent, is $25,426, which means each full-time equivalent employee returns $25,426 a year to Costco. Walmart is the red line below the orange line, and Walmart's productivity ratio is $12,166, which is less than half of what Costco returns. The bottom blue line is Kroger returning $10,205 per full-time equivalent. As you can see, this little graphic took me, taking 3 minutes to create from data that is already out there and publicly available. It's a really quick tool for investors. So as an investor, when I'm looking at the productivity ratio, what this tells me is that Costco's employees return over twice as much to the organization and provides a better investment choice given their productivity. And that signals the efficient and effective use of its resources. As an executive of Costco, this metric signals to me how far along the road I am on creating operational excellence and the extent to which the policies governing the people process are effective. In Costco's case, obviously they're very effective. Now, if I'm a Walmart or a Kroger executive, I'm wondering, how can Costco do that since they're actually a market leader in pay and benefits, whereas Walmart and Kroger are more, at or below market. So Walmart and Kroger have a few pieces of the puzzle to put together to explain that gap in the productivity and also to identify the pieces of the puzzle that are having a significant impact on that. So part of, a little bit of a deeper dive, because we know that, that true productivity ratio is actually a function not just of labor, but of also, materials and overhead. So part of the second part of that cluster is the human capital return on investment, which again strips out the materials and the overhead and focuses on human capital expenses. Now, that particular piece of information is not as readily available in the public sector, but 30414 has deemed it very critical in terms of allowing organizations to be a little bit more transparent in what it is that they're spending in terms of labor costs, which is basically pay and benefits. So once you're looking at the the productivity cluster, and you're thinking, okay, what else do we need to focus on? One of the key elements of productivity is, does our workforce have the capabilities that is needed in order to be productive? So having the necessary skills and abilities is a key to accomplishing an organization's mission effectively and efficiently. So if we can go to the next slide, please. So one of the ways that skills and capabilities are measured is looking at how effectively the organization uses learning and development for its current employees. So those are some of the clusters that are looking at being reported in this particular metric are the total development and training costs, which is defined as the sum of all spending on training and development within the organization. The second metric that is included is the percentage of employees who participate in training compared with the total number of employees per year. And this metric is defined as the number of employees who participate in at least one formal training experience divided by the total number of employees. The third metric is the average formalized training hours per employee, defined as total formal training hours for all employees divided by the number of full-time equivalents. The fourth key metric in this cluster is the percentage of employees who participate in formalized training in different categories. Now, this metric is defined as the number of employees who participate in at least one formal training experience divided by the total number of employees by category, such as leadership. And this is a particularly interest because it ensures that learning and development is happening at all levels of the organization. And then the last rate is the workforce competency rate. And this metric is defined as the average competency ratings assigned to employees. Now, these 5 metrics provide a baseline for what should be captured to measure the skills and capabilities of the organization. The skills and capabilities are critical because it does ensure that the workforce is both able to perform the work of the organization that can result in the achievement of the organization's mission. Thank you.
Thank you very much, Dr. Sandra, for sharing your insights on skills and capabilities. That was indeed a very insightful discussion and points that you have shared. I would now like to request Mr. Wilson Young to talk about culture and diversity. Mr. Wilson Young is Head of Insights and Futures, CIPT UK. He is also the Chair, Human Capital Standards Committee for British Standards Institute of UK. I'll put up your presentation in seconds, please. You may unmute your mic. And I would also like to share with the audience that those of you who have raised your hands, you may please send in your queries in the Q&A section, and we would take your queries in the panel discussion. We answer your questions in the panel discussion. And you may lower your hand after you have noted down your queries in the Q&A section. We'll be having a panel discussion, answer your queries then. So moving on to Mr. Wilson Wong.
Thanks, Javaria. Hi, I'm Wilson Wong, and my day job is with the Chartered Institute of Personnel and Development. Okay, so I'm here to really talk about 2 bits of the areas that are under 30414, culture and diversity. So what is organizational culture? Looking at the ISO definition of org culture, it is the collective beliefs, values, attitudes, and behavior of an organization that contribute to the unique social and psychological environment in which it operates. And this is from the standard 22316, which is an organizational resilience. And as you can well imagine, during this time, these organizations are being tested to their nth degree, and really you can see that where organizations have paid attention to the organizational culture and managed their workforce well, they are actually able to absorb and adapt to some of the challenges placed by this pandemic. You know, just to give you an idea of how big the impact is, the impact to the US GDP in the first quarter of 2020 is estimated to be 1.2% of 1.2%. And as we all know, the US was extremely late in responding to this crisis. China, 9.8% of its GDP has been impacted. In the Eurozone, it's 3.8%, and the UK is reporting it later this week. So the impact on the GDP is very telling because it really reflects the cost to the national economies of having their human capital locked down. So you're withdrawing people into their homes, and you cannot maintain your normal economic activity, and the hit is considerable. And a large part of it is due to in a way, the inability to deploy your human capital in the way it was designed. So going to the section on organizational culture in particular, we can see that there are certain metrics in 30414 that looks at engagement scores, satisfaction levels, the commitment measures of your workforce. But as we know, the organization culture is actually impacted by a whole slew of things, and these are proxy measures. So, you know, the kinds of policies and standards that you apply, the way that they're applied, you know, the manner in which people are treated, whether they feel that the way that these policies and standards are applied is fair, whether or not they are fairly paid in relation to their colleagues as well as to the market. So all of these impact culture. So for organizations, paying attention to the organization's culture gives you an indication of what you can actually expect in terms of reciprocal commitment to the organization's goals. In 30414, as Lee mentioned, there is the principle of materiality. So, you know, when you consider what is important to your organization, you may want to consider that organization culture is one of the proxy things that give you an idea of just how good your people management is. The other thing that the standard is trying to encourage is kind of evidence-based management, to give you data on your workforce that you can then make informed decisions. And over time, if you collect the data properly, then you can facilitate comparisons between business units, between companies here and elsewhere. And as Lee also mentioned, it gives you a handle on some of the people risks that we've seen actually at this time. So the other thing that is measured under organization culture is the retention rate, and the detailed metric for that is going to be coming out later this year, I hope. It's a technical specification number 23378. And briefly, the retention rate is really the ratio of separations against the total workforce during a defined period, usually a year, but you know, you could actually measure it on a monthly basis. And the key value of this particular measurement is how you segment it, so that you realize, you know which part of your workforce is leaving voluntarily or involuntarily, and whether the leavers are regretted, you know, whether you really didn't want them to leave. As part of the TC260 work, we have started a standard on organizational engagement, and that is being held by the UK, and that should be probably ready next year. Okay, so moving along to diversity, which is the next slide. So what is diversity? Is the recognition of individual differences and the uniqueness of each person. And these may be dimensions according to ethnicity, gender, sexual orientation, socioeconomic status, age, physical attributes, and so on, religion. In the standard, it asks for data on age, gender, disability, and it also has a category called other indicators of diversity. drawing on the principle of materiality, it's in your interest to look at some of the dimensions that that actually matter to you in your particular legal regime, but also in terms of your ability to build your employer brand. So it makes no sense for you, for example, to be operating in a particular state where your workforce doesn't represent the stakeholders or even the customers that you serve. You know, you want to be able to understand, reach out, and engage with the community through your diverse workforce as well. There is also one other indicator which is listed, and is about the diversity of the leadership team. And in line with the principle of materiality, the standard also makes clear that certain metrics are to be measured and reported internally, certain metrics are to be reported externally. There is also a difference in the reporting requirements for SMEs. So in diversity, for example, all the metrics, age, gender, disability, other indicators, and the leadership team have to be reported, and all have to be reported externally, whilst for SMEs, you are to report the same metrics, but for internal consumption. So you can see that there's a big argument about diversity and across the world. It's not unique to any particular economy. You find that even under this pandemic, the issue of diversity and inclusion is already very, very fraught. Partly because you find that the statistics around fatalities under COVID-19 have shown prima facie that there are disproportionate numbers of ethnic minorities and those in particular socioeconomic groups or socially deprived regions who have a significantly higher fatality rate under this pandemic. You know, it could be access to facilities or whatever. But you know, now this notion about diversity is going to be live in a completely different way, but access to healthcare and access to care. So you can see that this agenda is unlikely to cool down anytime soon. Just a little footnote that in terms of identifying what is a disability, the term itself is fairly broad. So it is really an umbrella term, but in the standard, it uses the classification used by the ICF. Okay. The other thing that I would like to just add is that a lot of these measures, a lot of these items that's included in the 30414 are evidence-based in the sense that there is, and we considered a lot of research about the relevance of including some of these measures into 30414, and in support of the evidence-based management approach, the CIPD actually has conducted a lot of what we call rapid evidence assessments. So that's looking at the empirical evidence in the academic literature to see what works. And in diversity, there is a report that you can freely download called What Works in Diversity Inclusion that was published last year, and that looked at the empirical evidence and looked at what practices actually made a difference. And the topic around the project around getting the evidence published is continuing. So there are reports on ethics and so on. Just to say that it's an open resource that is open to anyone who just goes to the CIPD website. Oh, next slide. Yes, And if you want to know a little bit more, and I'm going to take the opportunity to plug this book, it's a summary of the published standards as at 2019. And as you can see, some of the authors, of the chapter authors, are actually here today speaking. Thanks, Sandy, for your contribution to the book. This has now been used as a textbook in a lot of universities to actually showcase a different tool set for HR practitioners of the future. So you can see that it starts with a broad question about culture and governance, and then it goes into specific areas of practice where you can find different kinds of support from the standards themselves. And some of these are published under TC 260, and some of them under different technical committees, but all of them, of course, impact the deployment and optimal use of your human capital. I think that's it, and I'll be happy to answer questions in the panel discussion afterwards. Thank you.
Thank you very much, Mr. Wilson Young, for speaking about cultural diversity to our audience present with us today. Indeed, this is a very good initiative taken by ICMA Pakistan and HR Metrics, because this quality, or having such quality of panelists speaking to our audience in Pakistan, is really a matter of pride for all of us. And ICMA Pakistan is really glad to be collaborating with HR Metrics to bring this quality discussion for the notice of our members and professionals from industry of Pakistan and overseas as well. We would now move towards our next speaker. She is Lorelei Karavolante, and she would be talking about compliance, ethics, and workforce well-being. She is the CEO of G2nd Systems from USA, co-convener Diversity Standards Working Group, ISO PC 260. I'll be putting up your document slides in a second. Meanwhile, you may mute your mic and read the audience.
Thank you, and welcome everyone. As the slides are being put up, I would like to just recall what Mr. Lee Webster said a moment ago that's interesting about this particular ISO standard 30414, which provides guidelines on how to do human capital reporting. I think there's a lot of research and reporting about why, and we are focusing now on some examples of how. One of the areas of the standard, compliance and ethics, you might think, gosh, how can you apply and report on that? Compliance with codes of ethics and internal policies is clearly a major challenge for any organization. And the HR department plays a significant role in actually confronting and meeting these challenges while contributing significantly to the overall compliance efforts of the organization. So there's this balance of compliance and ethics and the role of HR to facilitate and support that organizational and culture and change management that happens constantly on a day-to-day basis, leading to ethical behavior or evidence of compliance with the organization's code of ethics and internal policies associated with them. What's interesting about this particular clause, subclause within the standard, is that it recognizes organizations will need to and can have some flexibility in interpreting and defining what the measures might mean to them. So let's say, for example, in the first year of compliance, recommended for internal reporting and for large organizations and also small organizations, SMEs. The number and type of grievances filed would be one. A grievance being defined as a formal complaint within the workplace. There can be many reasons regarding why a grievance could be raised, could be a harassment or discrimination issue, but the point becoming that the organization can decide and will need to define what grievance means to implement this or apply this metric. Does it fall under employee relations, for example? Arbitration, mediation, something else? There are many terms in this subclause that can be interpreted according to the organization's application of it. Another metric, number and type of concluded disciplinary actions. A disciplinary action can mean the process for working through a job-related behavior issue that does not meet the expected and communicated workplace regulations, for example. So number of and type of concluded disciplinary actions. So then you could, for example, in reporting on a grievance filed, take the number of workplace grievances and compare over time how many you had year over year. Another would be a percentage of employees who have completed training on compliance and ethics. Your compliance and ethics training, your code of ethics and the compliance with it. The economic scandals, for example, in recent years certainly provide evidence that it is relevant to consider ethical issues in the business context. And again, the business context, as our distinguished host introduced, discussing both non-financial factors as well as financial factors. So HR professionals are generally responsible for nurturing organizational culture and fostering change management. Within this scope, though, involves managing organizational behavior as part of this responsibility. So when organizations are identifying which jobs require training on compliance and ethics based on their roles and responsibilities, another metric could be the percentage of employees who have completed training on the content of business ethics, for example. Code of conduct of the organization itself, compliance rules, moral dilemmas, and within a given period of time. Additional qualitative information could also be meaningful. For example, code of conduct and ethics in terms of values and policies about whistleblowing or follow-up actions by HR, such as information and training provided on the subject. And an example of reporting on training and compliance and ethics could be identifying that percentage of employees who have completed the training on compliance and ethics and comparing that year over year. You can also consider disputes referred to external parties, for example, work-related disputes, even lawsuits. This metric displays the work environment where external resolution of internal disputes has become necessary, and the number of workforce-related disputes that are reported as being referred to third parties where appropriate jurisdictions provide a picture of the organizational culture or its context. And finally, the number, type, and source of external audit findings and actions arising from them. For example, your set of policies, legal documentation, regulatory requirements. Again, you can report internally as a small SME or externally as a larger organization. And most likely, a large organization would, of course, first report internally. Next slide, please. This is just a fun photo of a group talking about the ethics code and an ethics dilemma in an organization. So I thought it would be fun to have some visual behind it. The next slide, please, just to give the people sense of really interacting with the compliance code rather than having it be a set of documents that are only in writing. Compliance and ethics in a global context and a global workforce is certainly a fast-moving issue. And I think one benefit of using this subclause of the 30414 standard is identifying transparency opportunities and implementing those, benchmarking, peer-to-peer comparisons, internal reporting for identifying and ameliorating gaps and setting goals, measuring improvements internally, and then, of course, external reporting, including achievements, for example, for any size organization. So it's a balance of recognizing the importance of how, as Dr. Wilson Wong said, the organizational culture can influence so much how people in our diverse organization today interact and also meet those standards of compliance to the ethics codes of organizations. Thank you.
Thank you very much, Ms. Lorelei, for talking about compliance and ethics and workforce well-being with our audience. We are slightly behind schedule, so I would just want to politely remind all the speakers to kindly stick to the time limit that we have shared with you all, because in Pakistan we have a limitation and we have to, finish this session on time, as we have to break our fast. It's the holy month of Ramadan. I would now like to invite Mr. Brad Boyson, who is the co-founder HR Learn in UAE, and he would be sharing his insights on recruitment and turnover. I would put up your slides in a few seconds, sir.
Well, good afternoon, everyone. When I saw the esteemed group that Zahid had brought together, I really asked myself, what could I perhaps bring to the panel that isn't already represented or perhaps has a slightly different take? My background is I am an HR practitioner. And although I have been involved with this project from the very beginning, and I want to give Zahid credit for getting a lot of the original founders of this program together. When I looked at the section that I'm covering, recruitment, mobility, and turnover, it really got me thinking about my own work experience. And I'll start with my academic studies. My first academic studies were in finance. And living in North America, one of the first books I was given was the GAP, the Generally Accepted Accounting Principles for the United States, and other regions would follow, and international IFRS sort of comparable. And when I moved into HR and saw that they had some measures, but it took me a while to figure this out. People could effectively define their measures in any way they wanted. And I was shocked at this. It took me a while to actually absorb it. So if I can sort of scroll the slide, please, for the 14 metrics that are here under 4.79. Now, I'm not going to go through each one of these metrics. I hadn't planned to in any case, but what I wanted to share again was another example where maybe 5 years ago, one of my students here in the UAE, after completing a course with me, she called me up a few months afterwards, and she said, Brad, I need to talk to you. I'm doing a performance review, and my manager said, well, I'm not happy with the employee turnover. And she said, we have an employee turnover of 15%. And she said, is that good or bad? And I said, I can't tell you that. I don't know. And it really hit me, both in my heart and in my brain, that you go through this comprehensive process of measuring HR, studying HR, and as fundamental of a question, given a measure, is this good or bad? I couldn't answer that question. And where I'm going with this story is this standard and many of the ISO standards are a step towards improving that, improving it for, as everyone's mentioned so far, stakeholders, but I honestly believe it improves the capability of HR practitioners profoundly. And those of you coming from an accounting and finance background, you probably take a lot of this for granted in terms of standardization in certain terminology. So I'm not going to go through each one of these standards. If I could go to the next slide, please. These standards, or this particular group of standards, are sort of bundled along the workforce life cycle. You know, you take it sort of people coming into the organization through the process and exiting through the process. And in general, it's a measure of health, the workforce life cycle health. Actually, each one of these lines is animated. So, Davina, if you could just scroll down to almost to the end, I want to be aware of time. What the standards are doing, though, is anchoring in terms of time periods, in terms of dates, in terms of qualifications or clarifications on aspects like, is this something that should be reported internally? Is this something for large organizations that should be reported externally? So if you come back to an example of saying 15% turnover, this lady worked in retail. And having worked in retail myself, I could say, well, this is probably a pretty good turnover. But I don't know if her measure is per month, per year, per quarter. And what these standards are doing is creating anchors. So for example, take the recruitment process itself. Where does it start? Where does it end? You could say that it starts when a position is vacated. You could say it starts when a requisition is issued. You could say it starts when you start interviewing candidates. So for example, within this particular subsection on recruitment, we've created a very defined range that when people measure, time to fill or the period of filling a vacancy, there's a common understanding of where that process begins in time and where that process ends. You can always modify it for your own organization's needs, but all of a sudden, if you're using this standard, you've got a common vocabulary, a common measure and metric whereby you can compare apples to apples, oranges to oranges. And I know the vast majority of people on this call, this is something we should have done years ago. But there is so much resistance to standardizing a lot of these things that we do. And I'll be honest with you, a lot of this resistance comes from within the HR profession itself, because it requires a higher level of accountability for the people doing HR. If you're a high performer in HR, you love this. You are able to demonstrate. This lady who called me in a panic state, if she knew that her competitors had employee turnover ratios, voluntary, involuntary turnover at 30%, and she's half of that, what a great thing. What an empowering tool that is for the more competent HR practitioner, but also it empowers the organization. Dr. Sandy gave examples in the US of the different supermarket chains in terms of their productivity. This is more of a micro level in terms of the measures of the activities. But I'm going to conclude with my last sentence at the bottom of this screen here. And the reason I really want to emphasize this is there are a lot of people critical of this standards process because they feel that it focuses on the lowest common denominator of the practice of HR. And whether you call that activities or transactional activities, honestly, I don't care. Because I'll tell you, from my point of view, being an HR practitioner for almost 20 years, if you're not doing the fundamentals of HR well, If your workforce pipeline and life cycle is not healthy, how can you be focusing on the more strategic, value-added, forward-looking activities, outcome-based performance that are mission-driven, unless you're doing the fundamentals? So this standards process is designed to look at the whole cycle in terms of the activity and the outcome. And what I'm sharing with you today as a contribution to this webinar is that as a practitioner, I know that if I can focus on getting my activities done well and prove that they're doing well, that would allow me to allocate more resources to operational and strategic activities. And that is strategic. So with that final comment, I'm going to pass it back to the host. And thank you all for participating. And thank you, Zahid, for the opportunity to contribute to this panel.
Thank you very much, Mr. Brad, for sharing your views on recruitment and turnover. I would now quickly like to invite our upcoming speaker, Mr. Kefi Siddiqui. He is the head of IGI, FSI member, ISO TC 260 HR standards, and he would be sharing his views on workforce costs and workforce availability. Over to you, Mr. Kefi.
Thank you, Javeria. Thank you, Zahid. And thank you, everyone. Now, I'm going to ask you questions, and I request everyone to please, if you want to answer that question, please just tap into the Q&A section and write in your answer. So before we begin, since we are running short of time, I'll go straight to the point. And before we begin, I have a question. Can anyone guide me if the workforce costs and headcount are already being reported? Yeah, I'm on the Q&A side.
Here, I'm sure they can answer that.
Yeah. All right. So, can you see the face on the left bottom of the slide? I can see the face. Let me introduce you to this fellow. This is the devil. Devil is in the details. So yes, you're right. Most of you are right that workforce costs are being reported by many organizations, but they are being reported under different heads. For example, like direct manufacturing costs, sales and marketing costs, and admin expenses. So if you want to know the total workforce cost, you will have to sift through the pages of the published accounts of companies, and you'll have to add them together, and then you will know, then only you will know what is the total workforce costs. Likewise, the headcount is reported as a disclosure, and third-party headcount are not reported at all. Yeah, please go on to the next slide. All right. So if the workforce costs and headcount is already being reported, so what is so fantastic about human capital reporting standard? Can anyone see the face on the left bottom of the slide? This is the angel. You can't see the angel. But the fantasticity of this angel is this in its simplicity, entirety, and comparability. So look at these simple external matrices: total workforce cost, total number of employees, and total full-time equivalents, FTE. Now, when we talk of total workforce cost, it is simply one figure. But this one figure includes all employee costs, benefit costs, and all the third-party independent contractor workers, temporary workers, and part-time workers. So it includes everything. So that's the beauty of this angel, that it covers this figure in its entirety. Total number of employees and part-time employees, all of them are put together and converted into full-time equivalents to a full-time work week. For example, some countries work on 35 hours work week, some countries work on 40 hours work week, some countries work even on 48 hours. So what it does is it creates a comparison across boundaries. Yeah. Next slide, please. So this sheet is an example, a true example of simplicity, entirety, and comparability. Look at the fourth row, total workforce costs. It is just one figure, but when you look at this just one figure, you will know that it covers everything and nothing is left out. Likewise, look at the second to the last row, total FTEs converted to 48 hours work week. Yeah, so you can compare all of these matrices across companies, geographies, boundaries, and industries. And you will know, as Brad was saying, that you will know what is the good benchmark and what is not so good benchmark. Yeah. In the end, since time is running out, I would like to say that I love this standard. Do you? And I also like to say that whenever this name, Human Capital Reporting Standard, comes before you or is brought before you, you should remember that it is very simple, it is very complete, it is very comparative. Thank you. Thank you, Javeria.
Thank you very much, Sir Kefi. That was crisp and brief, I would say. Moving on to our next speaker for the evening, Mr. Neil McCormick. He's the CEO and Principal Advisor of HRM Advisory, member ISO TC 260, convener ISO TC 260 Working Group 2 Metrics, members of Standards Australia, MB 025, including Project Lead, AS 5329 Workforce Data Quality Standard. He would be speaking on technical specifications of ISO 30414 and its importance. Mr. Neil.
Hello, everyone. It's wonderful to be here. And I thank Zahid for the opportunity and ICMA for the opportunity to speak. Could you please put the first slide up?
Yes, sir. Just give me a second and it would be up.
While that's coming, I am convener of Working Group 2. We see here the reporting requirements as ISO 30414, and each of our esteemed speakers have covered off each of these. What Working Group 2 does is take the reporting requirements and turn them into specific technical specifications which clearly define a range of points. If I can go to the next slide, please. So the role of Working Group 2 within TC260 is to assist the other working groups that are developing standards to think through what metrics are appropriate. And then our further role is to develop the formula and the range of explanation and support for that formula for a particular metric. What that does is basically turn what is a report into something that an organisation can actually take and use to improve a whole range of things. I think every speaker tonight has talked about empowering the users to gain greater insight into the reporting areas. And we're also talking about highlighting consistent measurement. Comparative is so important. And the analytics, what do you do if your number is bad? Where do you look? What sort of information do you need? Where do you go, and what are the first steps that you take to do something about a number that you're not necessarily quite happy with? And I'll say improving productivity, and you'll hear me say improving productivity many times when you talk about 30414, because at the end of the day, if we can't do something with a report, if we can't turn a report into an activity, into an improvement, then we're missing a huge opportunity. Next slide, please. So each technical specification takes the clusters, as we saw in the first slide. So if we look at it, occupational health and safety has a number of metrics in it. So we will take occupational health and safety and we will turn it into a technical specification. And within that technical specification, we have the following structure. We have a contents outline, an introduction, a scope, any references that we have, terms and definitions that we're going to use. Then we talk about the title of the particular metric within that cluster, the description, the purpose for that particular metric, the formula, including the data sets that should be used, when those data sets should be captured. How do you go about using that? Another really interesting thing is the intended users. For instance, we may have some recruitment metrics, but it's very important that not just the people on the shop floor or the recruitment team see that information. You know, workforce planning and learning and development also need to see that information. So we've got to make sure that the intended users are actually covered off quite clearly. Now, contextual factors. What are contextual factors? What we highlight in each of the technical specifications is what you need to think about when you're looking at the number. So, for instance, we were just talking about recruitment. So the time to fill may be extending and it may be difficult to get people. On first glance, it could be that you know, the market is very, very tight. Or it could be that all of a sudden your competitors have ramped up recruitment and you have a range of financial constraints that make it difficult for you to hire appropriate people. There are a whole range of contextual factors behind a number that really need to be teased out and understood. Further to that, when you look at contextual factors, you should also look at the comparatives. So comparatives over time for your own organisation, for organisations of a similar ilk, or organisations in your industry group. They're, again, very, very critical for you to understand how do you go about fixing something? How do you go about staying ahead of the competition? And how do you go about understanding that what you thought was very good is actually in need of improvement? Then we go into predictive factors. And predictive factors cast a view of the future potential for issues that may arise around that particular metric. We do that for, pardon me, the 11 of the clusters within 30414. The next slide, thanks. Why do we do that? Well, it definitely improves visibility and consistency of measurement. If you can compare yourself to your former self and start to predict where you really want to be, that is a process that is a productivity improvement process for sure. It's talking about improving your outcomes and your processes as well. It allows for internal and external comparison by industry sector, location, organisation size, etc. And again, let me say, if you actually apply the logic of what we've just discussed to the 30414 standard and start to look at how to not only report on the information, but use that information productively, you will actually improve productivity in your organisation. It is a very, very powerful tool. We will have completed the technical specifications by the end of this year. when I say completed, I mean formally documented and released by ISO. All of the technical specifications have been drafted, and I dare say by September we should have them in final format for process. I think that should be my 5 minutes, and I thank you very much for the opportunity to speak.
Thank you very much, Mr. Neil McCormick, for your sharing of suggestions and insights on technical specifications of ISO 30414. Before we move to the panel discussion and QA section, may I request all of the panelists to kindly switch on their video, because we would want to take a picture as best as we can do in this situation. So if you can switch on your video, we want to take a picture, please. All the panelists, before we move towards the last segment of panel discussion, Mr. Kefi, Dr. Sandra, if you can hear me, Mr. Lee Webster,
Yes, I can hear you.
Right, Mr. Wilson, if you are there. Okay, so we just we try to do it again towards the end, but let me just capture it. Thank you very much, Mr. Wilson, for coming online. Dr. Sandra is missing, but we'll try to get her towards the end again. Thank you very much, everyone. Now we move to our panel discussion. Our audience has been waiting. They have put down quite a number of questions in Q&A. Unfortunately, we are short on time, so we will be allowing around 15 minutes for this session. I am pleased to share that moderator for our session for today is Chairman of CPT Committee of National Council of ICMA Pakistan, Mr. Athar Salim. Is the fellow cost and management accountant. So we'll have the speakers who have just shared the insights with you joining the panel discussion. Plus we have a surplus speaker, a bonus speaker, Mr. Hilger Pothman. He's the regional head human resources for Deutsche Bank Germany East, and he's a member of ISO PC 260. I'd request Mr. Hilger to come online as well. I can't see him actually at the moment in the panelists. And I hand it over to Sir Athar.
Thank you, Javeria. I think we have the most panelists now. If you want to take another picture, you can take it now. So,
Asim, you may also come online, please. Thank you, sir.
Thank you, Javeria. It was such a lovely session. I was so interesting to hear everyone, but due to time, I think everyone cut out what they wanted to say. And being accountant and looking at the reports, we always wanted to have something from HR. So this is the capital we don't see on the financial statements. And I think this standard will go a long way resolving these issues of knowing the people who make it happen, how the business succeeds. So especially in one merger acquisition deal, when a giant was acquiring a small company, what they were worried about how to retain those people, because in that small company, they were the C-level, and when they were going to be part of the giant group, the C-level were going to get away from them. So they were very worried about how we are going to keep these people with us. So human resource is something that every businessman, every leader is worried about. So with this, we have very limited time. Though I would like to keep talking about it, but I would like to put up some questions for the panelists so that our participant can get more info from them. So first question will be from, do we have Mr. Lee Webster with us?
Yeah, yes, sir. Yes, sir. I'm on the call.
Okay. So how do you think HR disclosure standards will help us in risk management situation, especially this COVID, but general risk management situation?
The issues from my 30 years of experience in doing as a practitioner in human resource management is the inability for organizations to reliably and credibly manage the inflow and outflow of talent. You rely on recruitment to try to fill the holes that you have, and you hope that you create an environment where people won't leave and leave a lot of the knowledge and skills and abilities that you need in order to accomplish your mission. The standards provide a way for organizations to manage the human asset with as much discipline as they would any other asset in the organization. The only difference, and it's a key difference, but the only difference between a human asset and the other assets in an organization is agency, in my view. And what I mean by that is a human asset can choose to leave or choose to stay, unlike an automobile or a building or a process that you have. Because you cannot control the agency of an individual, it makes it even more important to have enough information so that you can predict and manage the risk of departure of those capabilities in your organization. Up till now, human resources hasn't had the tools to do that. The standard will provide, at least in its current version, a basic level of tools that the HR leadership and organizational leadership can use to predict and to manage the flow of talent and capability in their organizations so they can make better business decisions in the future. So I would say that now there is no active and effective risk management without this standard. And I would say after the standard is made, then you'll have it.
Quite rightly said. Thank you so much. So my next question will be from Mr. Hilger Potman. Can you hear me? Have you joined? I think he just got disconnected again. So in that case, we can go back to Mr. Neil Cormick. Are you? I think he is with us now.
Yes, I'm here.
Okay. Okay. You talked about. Let's get to the question. What do you think? What business benefit of using this standard? Like, I do understand from the investor point of view, but what other business benefit does this standard give us?
Certainly. If we think about the old management statement, you can't manage what you can't measure. If you don't have consistency in the information that is put before you, if you cannot compare like for like over time, if you cannot compare and understand the root cause of a particular issue. So this evening I've been talking in terms of issues where an organization is underperforming. If a particular area, whether it be recruitment, whether it be occupational health and safety or compliance, is underperforming, we need to understand where to look to actually find the root cause of that issue. If you can measure things appropriately and you're using the same formula and the same structure, strangely, accountants have been doing that for eons. If you can do that, then you have a great opportunity to improve what you are assessing. You can improve and take the necessary remedial actions to benefit the organisation. So if you can measure it consistently and you can compare it, you most certainly can start to understand what the cause of a particular issue is, and then take steps to remediate that cause and improve the outcome for the organisation.
Quite rightly said. If you can measure it, that's the only way forward. So my next question would be from Ms. Lorelei.
Yes, sir.
When we look at this standard, we look at the multinationals and the big organizations. Do you think this standard can help the medium and small organizations?
That's a great question. And in fact, what I really love about the standard is that it gives such pragmatic examples of metrics that can be applied by any size. And I also like the fact that it suggests the internal reporting for SME organizations rather than external, because smaller organizations generally, to your point, don't do large public reports as larger organizations do. But reporting in and of itself and the activities that are necessary for organizations and people in them to go to complete in order to do a report will help them identify the value of human capital, their own human capital internally, and also enable them to benchmark within their own ecosystem of other SME organizations, peer-to-peer comparisons, for example, as I said, within the context of internal reporting for identifying and ameliorating gaps and setting their own goals. So I do see measuring improvements internally and this standard as quite relevant for SMEs, smaller organizations, not just large. It's really an interesting win-win as I go through and read this standard.
Thank you. So we are hopeful that SMEs will adopt this and follow this technique as soon as it's there. My next question will be from Mr. Wilson Wong. You talked about culture, but I think it's very hard to capture culture in the reporting. How do we do it? You know, how can we measure culture?
Okay, I mean, when I talked about culture, I was referring directly to 30414, where the proxy measures were on engagement, commitment of the workforce. So you're right. It is an extremely complex effect, and it looks at the fairness of the management towards its staff, the remuneration. It looks at whether or not the organization is ethical. So there are a lot of dimensions to this. But for reporting purposes, in that category, they're looking at whether the employees are engaged with the purpose of the organization. And I mean, Lorelei talked a little bit more about the ethics side, and you can see that in some organizations, we've already seen some of the large corporations with their names plastered across the front pages of the financial newspapers, the kinds of like Volkswagen and so on, where they have lost the trust of not only the employees, but also their customers. So managing all those things contributes to the culture of the organization. The other organization that I can think of off the top of my head is Boeing and 737 MAX, and the wonderful way in which they've managed it so that all the planes are grounded. So, and they may never fly again, costing them hundreds of billions because somebody wanted things to be faster, somebody wanted to be cheaper, and they've cut corners. So, to your point, the metrics is only a proxy measure of whether the employees are prepared to further the purpose of the organization. And if they're not, there are other causes. It doesn't go into the details, but it's a proxy measure.
Very, very relevant and interesting. Let's hope that this measure will help all the businesses in long run. So my next question would be about the quality of hiring, and that I'll put to Mr. Brad Boyson.
Sorry, come again.
The question is how we measure quality of hiring.
All right. In fact, fortunately, I have been the convener of the metrics, the standard on the quality of hire. But it's like culture, there are so many ways of looking at the quality of hire. It could be the competencies, it could be the productivity, it could be the retention rate. But having considered all these possibilities, one of the credible mechanism and the consistent mechanism, I'm using the word one of them, because obviously the beauty lies in the eyes of the beholder. So whatever the quality that you define, it's up to you. But according to the standard, for example, retention of the new hire is a very good indicator, and the performance of the new hire. So whenever you hire your people, obviously you would like them to perform, and it's the choice, always a wish list of the employer that the employee should be high performing, so their performance rate. And the second one is their employer wants them to stay longer if it is a productive employee, so their retention rate. These are the two metrics which are quite credible enough to indicate the quality of hire, and it is doable. And as Wilson said, with metrics is always a proxy figure. It just tells you what has happened. It doesn't tell you why it has happened. So if there's some issues, you can always find out the why part of it and go for the improvement.
Thank you. Thank you, sir. So my next question will be from Dr. Fendi, but I'm going to take this question from our participants. The question is from participant Mr. Muhammad Kamran Jamil, and the question is, these questions are not yet made mandatory as part of annual financial reports by regulatory authorities. How do you see this can be made mandatory, and what is the possible timeline for its implementation?
Well, that's really a great question. And I would challenge the CFOs and the CEOs that are out there not to wait for it to become mandatory, but to adopt it as a tool to help improve and be the baseline for expectations from their chief human resource officer. What's required is just an over high level pyramid of metrics that helps the organization to get better value out of its employees. One of the things that, Lee had mentioned is the agency of the employee. They can come and they can go. Well, what's more important than that, they get to choose how much effort they're going to expend when they come into the workplace. So why wouldn't the CEO, the CFO, build up to the accountabilities of the Chief Human Resource Officer? Because the Chief Human Resource Officer has responsibility for not only engaging the physical, but the mental of the employee as well. And, as an aggregate, the 30414 standard, it really looks at the elements that it takes to get the maximum performance from each employee. Performance could be looked at, individual performance is looked at as, can the person do the job? The second, will they do the job? And will they do it consistent with the values of the organization? So that there's organizational values and practices that can put barriers for employees, or they can remove the barriers for employee performance. So when we look at the compliance, we look at diversity, we look at culture, those are all organizational factors that help employees to want to expend their energy and their talents in order to carry out the work of the organization. So my challenge is for organizational leadership to take it on And when you're looking in terms of how much money have you invested in your skills and the capabilities in your learning and development, fly it as a flag to your investors. You know, if you're publicly held, look at, we are good stewards of this resource. We have productivity. We are, as the chart that I put up, we're the Costco. The difference that, you know, shares of Costco, you know, is there's a difference between the book value and the market value of a stock. And that difference, that gap, is looked at as the intangible value. And that's where the value of people come in.
Thank you, Dr. Sandy. You rightly said it's the leadership who need to take the first step. Instead of the authorities like SEC and anyone else, it's the leadership who should come forward and take this step. My last question would be, because we are quite late, from Mr. Kafi Siddiqui. So, how this standard would help in managing workforce availability?
Okay, so as I said earlier, there are very simple matrices in this standard, all right? And mostly
If you have muted yourself.
okay.
Yeah, now we can hear you.
Okay. I don't know how far I've been heard. Okay, I was giving an example of the Recodic project when I was working with them, and I was tasked with hiring 55,000 people, and the total population of West of Balochistan was 57, out of which only 27,000 were available for jobs. Rest of them were either beyond 65 years age or less than 18 years age, or they were employed by the government, or they were landowners. So only 27,000 people were available. So you have to have a matrix or a measure through which you can identify your gaps for completing your needs. So this standard gives you all of these tools. So for example, at that time, since I was senior, I knew how to develop these matrices. But before that, long time ago, I didn't know. And I was helped by my seniors. But this standard gives a platform to everybody equally. So now, if somebody else comes in my place and does that job, he
We are facing some connectivity problems.
Along with, hello?
Yeah, now
hello?
we can hear you. Yes, now we can hear you.
Hello? Hello, can you hear me?
Yes, we can hear you now.
You can hear me now, so you lost what I said. Okay, so where was I cut off because of this internet?
I think the last two sentences, you can start from there.
Okay, so in the end, I was just saying that if anyone now comes in my place and has the same kind of dilemma, so he can simply turn over the pages of the standard and look at the metrics, and he will know what are, how to do what. So that's, it's there.
Thank you, Mr. Siddiqui. That's a good insight. I'm looking at the time, and I think Javeria will be very keen to close this session because it's almost iftar time here. So Javeria, it's up, over to you, please. Thank you, all the panelists.
Thank you, all the participants. Thank you to you and everybody.
So thank you very much, Athar Saab, for moderating this panel discussion. And unfortunately, we are short of time, so we are not able to take any more questions. So, but I would like to thank HR Metrics for collaborating with ICMA Pakistan. I would like to thank ICMA Pakistan's National Council for making this event possible virtually, but this is what we have to do. I'd like to thank Sir Athar for moderating this session and all our speakers connected from various parts of the world. It has been a pleasure hosting you all. Your insights have really added information and knowledge for our participants, and hopefully we'll have you again in a session anytime soon. So best of luck, have a good rest of the day, and if it is done, so have a good nap before you start a productive day tomorrow morning.
Thank you. Thank you very much.
Thank you very much. We may leave the
Thank you.
meeting now.
Thank you very much.
Bye. Javeria, Lorelai, Athar, Sandy Miles, and everyone. All the best. Take care of yourself.
All the best. Take care.
Take care, Zahid.
Neil, thank you.
Thank you.
Thank you.